So did you know a Canadian real estate company raised nearly $900 million from regular people? And then the courts ruled they misled those investors with fake valuations. Fortress Real Developments, the shiny developer behind projects from Barrie to Winnipeg, just had their day in court, and the ruling is clear. They didn't just make mistakes, they crossed the line into fraud. And this is where it cuts deep, because a lot of Canadians who invested thought that their money was safe. They thought that this was their ticket to early retirement, or a way to hedge against inflation, or a smart, stable way to grow their wealth. Instead, their money vanished into a housing black hole. And if you thought your home equity, your RSP investments, or even your retirement nest egg couldn't get sucked into fraud like this, you need to hear the whole entire story, because Fortress isn't just about one bad developer. It's a warning for Canada's entire housing market. And later in the video, I'm going to show you the exact trick Fortress used to make their investments look safe, and why that trick could still be happening right now in deals across this country. I'm Claudia Ragona, one of the Ragona sisters, and today we're diving into the Canadian real estate fraud case that has shocked investors, regulators, and homeowners alike. Fortress Real Developments. If you just thought, wait, fraud in Canadian housing, then you're in the right place. And trust me, by the end of this, you're going to see Canadian real estate in a way you'd never seen before.
Petroza were found guilty of criminal fraud charges in a Toronto courtroom Wednesday. Investors lost tens of thousands of dollars, in some cases their entire retirement savings, investing with their company, Fortress Real Developments. The courtroom was packed with many of those investors, including Linda Bilarosic of Burlington, who, after working nearly 4 decades for the federal government, lost almost all of her $63,000 in
Investors had been following the trial closely until it concluded in April. While the two men were found guilty, as they hoped, the pain of the loss still lingers. Eduardo Cavaco invested $260,000.
And I lost every penny of that money. This is terrible. I feel terrible about that.
The case centered around what are known as syndicated mortgages, where investors loan developers money with the assurance that if something goes wrong with the project, the land will be sold and they'll get their money back. It centered on syndicated mortgages obtained for 2 projects, the mixed-use Collier Centre in Barrie and the condo tower Sky City in Winnipeg. The judge wrote those inflated values were supposed to demonstrate to investors how secure the investment was, something that the company touted as its first priority in its pamphlets. The men now face 2 to 14 years in prison.
So who was Fortress? Well, according to CBC News, Fortress Real Developments positioned itself as the smart money in Canadian housing. They raised nearly $900 million from more than 14,000 investors across the country. And these weren't hedge funds or banks. These were everyday Canadians, your retirees, teachers, small business owners, people who thought that they found a safe, smarter, better alternative to the stock market. And Fortress promised steady returns on condo projects. They branded themselves as experts who knew how to make money in real estate when everybody else was guessing. How convenient. Sounds great, right? Well, except here was the catch. Many of those projects never got built. The money was locked up. Investors couldn't get it back. And those steady returns they were promised, well, they never arrived. The Ontario Superior Court ruled that Fortress and its executives misled investors by failing to disclose crucial facts. Specifically, Fortress presented loan-to-value ratios based on future condo values, what the condo might be worth if everything went perfectly, instead of the actual as-is land value at the time.
Wrote in his decision,
I find beyond a reasonable doubt that Rathor and Petroza intentionally misled investors about the value of their secured interest in order to induce them into investing.
So let me translate that. Imagine you're buying land worth $10 million today. Fortress would tell investors that the future condos built, the project could be worth $50 million. Then they pretended that $50 million was the current valuation. By that math, that loan looks safe. But in reality, the land was worth only $10 million and not 50. Big difference. If the condos never got built, and many never did, investors were left exposed. And that's not a small detail. That's the difference between risk and safety, between protection and disaster. And Fortress didn't disclose it. The court said that omission crossed the line into fraud, and thousands of Canadians got caught in this trap. People who thought, hey, I'll make an easy, 8 to 10% a year. That's better than my savings account. Instead, they ended up in years of legal battles. They got pennies back, if anything. Some are still fighting today. And wait until you hear what happened in Barrie, Ontario. Fortress pitched investors on a glitzy new development that never even broke ground. The money went in, the project never rose out of the dirt, and that's not just bad luck. That's systematic failure. Now, you might be asking, how could this even happen? Isn't real estate regulated? The truth is yes, but not the way you think. Fortress used mortgage syndication, basically pooling money from investors to fund development loans. On paper, that's legal, but the appraisals they used were based on those inflated future values, and investors weren't told the truth. So think of it like this. If I hand you a $20 bill and say, this is actually worth $100 because one day it might become a rare collector's item, would you believe me? Because that's essentially what Fortress did. They convinced people that future dreams could be treated as a current reality. And the court said that's fraud. According to court filings, investors across Canada lost hundreds of millions of dollars. Some got a few cents on the dollar. Others got literally nothing. This wasn't a bad investment. This was a systematic failure of trust in Canadian housing. And according to CBC News, some investors lost their entire life savings. One told reporters, I feel like I was tricked. I thought I was being smart, but I lost everything. And that's the devastation we're talking about. You have retirees who thought they were secure, suddenly had nothing. Parents who thought that they were saving for their kids' education had to tell them, sorry, the money is all gone. And small business owners saw their safety nets evaporate. This isn't just numbers on a balance sheet. This is Canadians crying on their kitchen tables because they trusted the wrong people. And honest to God, this part makes me so furious. And here's where it takes a wild turn. The Fortress case isn't just about one company. It's about a loophole in the way Canadian real estate deals are structured. Developers can still lean on private investors, and appraisals can still be massaged to look prettier than what they are. And Canadians are still desperate for safe investments in a world of rising interest rates, shaky stock markets. Now, if you combine all of that in today's condition, higher borrowing costs, inflated property prices, massive household debt, and what you've got is a perfect recipe for another Fortress-style implosion. And look, I'm not here fear-mongering. This is how bubble bursts. Inflated valuations, hidden risks. And what does that mean for you if you're a homeowner in Toronto, Vancouver, or Calgary, or anywhere in the country? It means the values we're being told to believe in might not be as solid as we think. If one developer can mislead people on nearly $1 billion of investments, what does that say about the stability of the whole system? And here's the part that gets scary. According to the Financial Post, regulators are now under pressure to tighten disclosure rules for private real estate deals. But let's be honest, regulation always lags behind the scam. By the time the rules change, the damage is already done. And right now, we're still living in the shadow of Fortress. And I want you to picture this. Projects collapse, supply disappears, financing dries up, trust erodes. And what happens when valuations are built on dreams instead of reality? That's how the market crashes. Fortress isn't just a fraud case, it's a flashing red warning sign that Canadian housing market is vulnerable. So what do you do and how do you protect yourself? Well, first, if the returns sound too good to be true, they probably are. Fortress promised an 8 to 10% steady return. In a zero interest world, that might look amazing. But it was the first red flag. Second, demand transparency. If a developer or an investment firm won't show you the actual current valuations of the land, just walk away. And don't fall for future dreams being passed off as today's safety. Third, diversify. Never put all your savings into one real estate play, no matter how shiny it looks. Fortress taught us that even in Canada, we're being told real estate only goes up. Housing is not a guaranteed win. So here's the bottom line. Fortress may have been found guilty, but the bigger risk is still out there. If you own a home and if you're saving for one, or if you're tempted by, you can't miss real estate investments, learn from Fortress. Don't fall for the dream without seeing the reality. If this helped you, please don't forget to subscribe, because this is where we tell you like it is. And now I want to hear from you.